Good morning, everyone, and welcome to the Quantum Morning Leap. My name is Doug McKay. I'm the founder of Quantum Leap Futures. This is a subscription room. We have a live chat room and live trading analysis during the course of the day. Of course, each morning we come together and take a look at the market macro to micro, the structure, where we are within the different trends. Then we drill down to the trade levels that we're looking at, create our trade plan, create our targets for the day, and create our hypotheses. If you're interested in finding out more about the room, please send an email to quantumleapfutures@gmail.com. This is not a commercial endeavor. We do not have a website. This is just me giving back in a group of retail traders that have been around in one shape or form for coming up on 7 years this month. You can also check our prior morning sessions. The videos are on YouTube. Just do a YouTube search for Quantum Leap Futures. And of course, please follow me on Twitter @crazy2. And if you like what we do, please retweet and hit that like button on the YouTube. Okay, before we get going, just get the legals done. This information is for the purpose of educating members who want to expand knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to a financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own risk metrics. Okay, so first of all, it is Thursday, September the 10th. This is rollover. The December contract is now tradable. The December contract will continue to trade until next Thursday, but the liquidity will start drying up. Now, I used to trade the front month contract until the weekend, but for personal reasons now I roll over for the Thursday morning. So all levels and all analysis is going to be done on the December contract. That's the ESZ5, the Z contract, not the U contract, and I will be trading the Z contract today. There's enough liquidity within the December contract, so I don't have to worry about that. Is it valid to continue to trade the September contract? Absolutely. In fact, there's lots of liquidity there. Still probably 2-to-1 liquidity right now on the September contract to the December contract. But I just like to move forward and get to the December contract and start doing my analysis based on that. So there is a huge spread right now. The typical spread is between 5.5 and 6.5 points on the two contracts. Right now, we're running roughly about 10 points, 9.75 to 9.5 to 10 points spread on the two contracts. As we move closer to expiration next week, that differential will continue to shrink, and that's just the cost of carryover on the futures. It is a normal phenomenon, but the spread is big. Now, when the spread is this big, okay, things can get a little bit crazy, especially in the volatility and the average true range that we have. Right now, our average true range continues to expand. Our 20-day average true range is running 48.86. That's greater and continues to be greater on a daily basis. We had a huge day yesterday. We had a 56.5 point full session. We had a 52-point RTH session. And so far in the Globex, it expanded out. So I got to check and see exactly 57.75. And our low is now 19. So we've had a 38.75 point Globex range, and that can continue to expand for the next 30 minutes. But right now we're going to use 19.19 as the low. So just taking a quick dive into our normal routine. I always like to start with the monthly and take a look at the where we are in the trends. Of course, this is a continuous contract. I have to use it for the monthly because the December contract doesn't go back as far. You can see that we've had a great run, a great couple of years of bullish market, and we've got the first sign of a top being put in. We're below the 9 and the 20. We've lost slope and separation, so it is challenging the overall long-term trend. Just going to switch over to the December contract now. You can see that we have a possible FUBAR Mr. Sneaky on the monthly, but we still have lots of month left to go. But the trend is being challenged. The weekly, you can see that we've got a start of a downward trend. We did create a technical gap. We had a FUBAR Mr. Sneaky. We tried to come up and test the 9, and we rejected, and now we're trading near and below the open of the prior week. And the change in difference, this was 1831 in the September contract. The fractal low on the weekly is now changed to the 1823. Last month close, low is 1890 and a quarter. So those two are important to note that they've changed in terms of their numeric price. But we do have a slope, and separation to the downside, so we have a downward trend starting on the weekly. Same thing on the, let me get rid of the open interest here. Same thing on the daily. We had that same pattern, created a tech gap, FUBAR, Mr. Sneaky. We came up and we rejected the 9, okay, and then we tried to break above the 20 yesterday and we failed, and now we're below the 9 and the 20. We've got slope and separation to the downside. There is a downside trend on the daily. Going to the intraday, 4-hour, we've been in this consolidation after a long downward trend, and we're just basically consolidating sideways. But we are below the 9 and the 20, and we've got a possible continuation of the trend down. We are seeing some weakness in the 4-hour. In the 30-minute, same thing. You've got this strong move down, consolidation, tried to start an upward trend, failed overnight and came down, and now we've got slope and separation to the downside with a possible downward trend. Right now on the 30-minute, we've got a possible FUBAR and a possible Mr. Sneaky setting up, but this will be won't be valid until the end of this 30-minute bar right here. There is a naked cross up here at 1937.75. There's another one up here at 1975.75. There's nothing below us right now on the 30-minute, but there's a lot of naked crosses above and below us right now. So we've got, I think, a rotational market ahead of us coming into next week. Is the downside over? Well, don't know, but certainly looking like the downward pressure continues, and I'll show you why I even think that more in just a few minutes. Going to the 15-minute, same thing. You've got a naked cross here at 1941.75. There's also one down. Was it down here? No, we just closed it out. It was this one I was looking out at earlier, but we had that sell-off. Again, on the 15-minute, you've got a FUBAR, Mr. Sneaky, tech gap. So probably gets a bit of a rally up to close this gap. Probably test the 29.30 level on the December contract. That'll be somewhere around 39.40 area. And you know how important that 39.75 we were talking about in the September contract. But slope and separation to the downside, the first resistance going to come in around the 29 in the December, around the 39 in the September. Going down the 5-minute, same thing. You've got slope and separation to the downside at the foo-bar, Mr. Sneaky. Was it a foo-bar? Hard to see the red line. No, this wasn't a, yeah, it was. A foo-bar right here and Mr. Sneaky right here, rotation back up. Remember this pattern. This pattern is an important pattern. You can trade this, especially gold on the 15-minute. But the overall trend is still down, although it is being challenged on the 5-minute. And we could, we're trying to get above right now. We're trading just above the 9. We could come up here and there. You see it. A move to the 20 SMA is going to bring us up into that 29. So I think 29 is going to be a very important key line in the sand for us. Again, a naked cross above us. We closed the one that I was looking at below us. That was all the way back here. We've now closed it. So nothing below us. So we could get a bit of a rally coming into this RTH session, but the overall trends on most time frames are to the short side. Okay, taking a look at the composite. This is my new composite. I posted it in the room for you. This shows the balance area that we've been trading in since we fell and we had that significant breakout candle. Just let me move this to the back for a minute. This was a significant breakout candle. Then we've been consolidating in this area, and the value area high is here at 77 1/4. Value area here is 1904. 1904 is going to be a very important number for us, because if we break that, I think we're going to come down into the 1800s and test some of these lower levels. Right now, we're trading at 1926. We have a CLVN just below us. We've got the prior RTH session just above us, with the low being 26 1/4. So if we open up down here, we're going to be opening up outside of range and outside of value from yesterday's. Yesterday was a outside engulfing, bearish engulfing candle, and if we stay below the 25. The CLVN here at 25 1/4, then we're likely to come down and close this gap here at 21 and challenge the overnight low at 19. We've got microcomposite VPOC here at 23.74, 22. You should be targeting the 23.75 below the 25 1/4. With continuation down into this 21.22 area. The value area low of this 2-day microcomposite, value area high is at 1850. So that's just 2 ticks below the overnight low. And then you've got a CLVN here at 1750. This is going to be our key line in the sand below us, okay, for lower price continuation down towards targeting that naked VPOC down here at the 1912 area. And then we've got the 07 and the 04 as key levels below us. The 20-day ATR target to the downside off of the Globex high at 1957.75 is 1909. So we are within range. Even with the size, we've had a 38 3/4 point range. We're still within the 20-day ATR target to hit that 1909. And we were talking about that yesterday, that 1944 area, and where we opened, the RTH session yesterday. I was thinking, not likely to go down to that 1944. We are likely to get more a rotational day. Well, then we set up into a trend day, and where did we go? We went down to that 1944 and expanded by 10 points. It was an incredible, huge day, red day yesterday. Everybody was thinking that we were working our way back up, and we were gonna go out, hit those upper targets. Well, when so many people are thinking that, usually the market's going to do something to completely fool everybody. We're holding that 25 1/4 so far. If we hold this, look for them to rotate back up into the 31 33 area. Remember, 31 and 33 are the two microcomposite VPOCs in the September contract. The market's still going to have memory for a lot of those September key numbers. So that 31 and 33 is important. I'd be targeting the 31.75, but 27.75 is going to be your first target above, and it's just sort of chopping around this 25.25 range right now. Above the 31, look for continuation to take out the close at 33.50. That's at and that's also that September microcomposite VPOC with continuation up to when we got up here. They tried to hold value above the gap, and that was at the 39.75. And if you remember, 39.75 was a very important number in the September contract. It was actually the key line in the sand that we were using yesterday for lower price discovery. I wish I would have traded it better, but what can I say? Above that, we've got 42. Next big number is going to be the 48.75. This is basically that 1958 adjusted to the December contract. So really, your 49 now becomes 40, and your 58 becomes 48. And these are going to be two key levels above 48. Then I think we get a move back up into the 62 range. And based on the low overnight so far, our average true range above us is going to be 48.86, 1968 area, 1967.75. So 1967.75 actually takes us up to the CLVN above this balance around 62. The thing I don't like right now is we have an area here between 1940.50 and 1911. You can even go down to the 1898. This is very toothy. This is what I call undetermined fair value. We have a lot of undetermined fair value. There's no prominent price within this range. You've got CHVNs at 31.75, 27.75. You can even go 23.50, 18.75, 13.50, and 08.25. I mean, this is ugly area because there's no real price acceptance. Therefore, what's going to happen? We're going to get a lot of rotations as they try to determine what's fair value within this range. So, as long as we stay within this area, it's really going to be choppy, 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 choppy. So if you're new, you're not doing well, you're not comfortable with your trading, my recommendation is take the next 2 days off, have a long weekend, sit around, watch the market, but it's gonna be, if you're not comfortable with your trading, it's gonna be easy to dig yourself in the hole, and you gotta really control your risk. I didn't do it well yesterday. I will be controlling my risk very, very, very tightly today. So anyway, let's go to the overnight, start moving our numbers over. Our overnight low is down here at 1919. Come on. And our overnight high is up at 57.75. And our current VPOC, which could shift if we come down here and trade more in around 23, it could shift. We still got about 18 minutes there. You can see how toothy this overnight session was as well. But I'll put the overnight VPOC in right now at 36, and we'll just keep an eye on it. If somebody sees it shift, let me know. And really not much more that we need to get from overnight. So what we can do is expand this out and start looking at how do we trade this. Well, we talked about this 25.25, and we've got the range low from yesterday at 26.25. So I'm going to split the difference. Okay, and I'm going to put a trade area at 25.75 that's going to incorporate those two numbers. I will not want to short unless I'm below that 25.25. I will not want to get long until I'm above 26.25. Above 26.25, I will be targeting the 27.75 as a scale, and that is labeled wrong. And then above that, I'll be looking at that 31. I'm going to front run this 31.75 at the HVN from yesterday's close. Come on. And then, of course, we've got our naked close at the 33.50 area. It'll show up when we start our session as a dotted line, so we won't have to put it in there. And then, of course, just above that, we've got this 34.75, which was a range low. Was it range low? Or, yeah, range low from the prior day session from yesterday. So that's also a LVN, so I will be using that as a trade level. If we get above it, then I'd be looking for a move, a continuation up into the key line in the sand, which is going to be the 40 area. It is also the value area low. Okay, bring that to the front. Okay, and then once we're inside, this is an old level, once we're inside the value area, okay, then we're going to be, outside of this choppiness, okay, and you can use your first target, much more defined at 42.75. And then you've got the 47.50. And then the next trade area is going to be up here at this LVN at 51.25. You've got the midpoint and the VWAP. So I'm going to put a trade area there. You could actually front run it a bit at 48.75, but if you really want to be aggressive, because if you get above 48.75, I'd be looking for, I'd be looking for a move into the midpoint and the VWAP from yesterday, which is between, I'll actually move this up a bit to the midpoint and the VWAP, so it encompasses both of them. Above there, look for the overnight high to be taken out and continuation into the 1960.75, with this IB high at 63 as your next trade area. 63. It's actually 65.25. I'm going to use 65.25. And then above that, you've got the 67.75 as our ATR target to the upside. Okay, and then just above it, 69, you got a CLVN at 68.50. You get the LVN at 69.50. I'm going to use 69.50 myself. And then, the value area high at 71. And I'd be targeting just above that at the 1970. Remember, 69.50 is the microcomposite VPOC for the 3 days, we tried to hold value before, gapping down again. It was where we gapped up to, tried to hold, couldn't hold, and then came down. Okay, and then above that, I don't know if we're going to get much farther than that. You've got 74.25 target at nothing really up here. You got the HVN in the open from yesterday, so we'll use that as a target. And then 78 as a trade area, 78.25. You got 79. Remember, 79.50 was our next big target to the upside on the September contract. And then above that, there really isn't anything. There's the range high here at 81.75. And then the next big target above us will be 85. And I'll be surprised if we get up there today. All right, to the downside, I think, which is more important to us right now, below 25.75. You've got the 23.75 as your first target. But the big target is going to be this naked VPOC. Oops. I don't know why it keeps not changing the default. You have 23.75, but the big target is going to be the 21.75. 21, you can front run it. 22, the microcomposite VPOC there, but I'd use 21.75, and then look for continuation. Take out the overnight low down at 19. Below 19, you got a little bit of support coming in at 18.50, 18.75. I'm going to use 1850. The CLVN is at 1750, so I'm going to use 1750 because they'll probably push to test that. And then below 1750, this is where we get much more defined, okay, in terms of tradable, location. 1350 as your target, with the 12 naked VPOC right below it. And then a little bit of support coming in just below that, 1150. And then our ATR target to the downside is at the 1909. All right. We'll just make that cap lock got stuck on. Okay, and then the 07, I'm going to use the 04. 04.25 as my next trade area, because if we get below 04.25, this is going to be my key line in the sand below us. And below 04, you've got, I would target 1900. But really, it's going to be about this 98.75. Put this down at 98.75, target 19. And then below 98.75, we're getting back into price discovery or lower. And I think you've got target down here at 94.50. 86.50. Oops. Sorry, gang. I hate when it does this. Come on. All right, 94.50, 86, and you notice I'm not putting any trade areas here because I think that you just want to stay short when we get below that 98. 86.50. Little bit of support at 84.50. And then below that, you got nothingness. And I think we're going to get a bigger flush. 77.75. $75, 67.25. And you've got this naked close at 64.50. Now the next big target below was 42. It's now been changed to 32 with the change in the contract. So I'll bring this down. $32.50. All right, with 49.75. As an area, and really below 32, then it's all going to be about this 18, 19 area. And I don't think we're going to get there today, so I don't have to go much further than that. Here we are, we're back inside of the range, but outside of the value. I'm going to put this to the back, don't I, so we can see the value area high. This is going to be a zipper area. This has not been auctioned well here above that 35 area. So we, if we get inside and we hold inside a range and we test the upper side of value or upper side of balance around this 31 and we get above 35, we should get a quick move up into the 40 area. Below 25, we got great targets down here, and I'm still thinking we're going to see lower. When people see what happened overnight and come into the RTH session, you can see here's a great view of overnight. This was just brutal. Just a long, slow, I mean, look at, we were only rotating up on the average of 3 points all the way down, and we were averaging roughly around 5.5 points. It was just a beautiful line walk all the way down. Got to the low, found a little bit of support. Now we're starting, looks like we're going to roll over, but if we fail, off of this, I think it'll be the 35 area, 34, 35 area. If we fail off of that, and we can flush pretty quickly to the low side. I don't have time to do, well, just let me quickly do gold. Gold continues to bounce off that 1100 and coming up now testing and just above the 1270 area. Next target above is going to be this 1180. I'm not trading gold today. I think gold is still a tough trade. We've tested the 1100. If they come back down here again, don't expect 1100 to hold. And remember, we're looking at that 1091.40 as the next big target below. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. Sorry for the length, but with rollover, it takes a little bit more time.